Hello. Welcome back to Alpha Beta Soup, where we unpack Bitcoin using on-chain analysis. I'm TXMC. We had a dramatic Friday to close out the week, did we not? We'll take a look at the events of the last couple of days and check in with our theory that price would bounce at the short-term holder cost basis were it to be tested. Spoiler alert, it totally did. All of that and more is coming up, so stay tuned. If you're enjoying this content, make sure to give my video a thumbs up and subscribe to the channel. If you hit the bell icon next to the subscribe button, you'll be told about all of my videos the moment they come out. Your support means everything to me. But I won't keep you waiting any longer. Let's talk about Bitcoin. Let's take a look at the price chart here. So we had a couple of scary days of price action. We're down about 20% from the highs, I think. Let's double check this. Yeah, about 20%. And when we spoke the other day, price was here. It was around 57,000. And where I was looking was for a bounce here at this yellow line, this $53,000 line, which marked a couple of significant areas for us. It was a technical support level here. It was the top on September 7th on El Salvador's Bitcoin Day, the day they made Bitcoin legal tender. We got a big futures crash, some spot selling, and a $10,000 red day. That marked the top for an entire month. It sent us down into the low 40,000s and helped establish the bottom of this channel that we've now been watching for a couple of months. Once price got back over this level, it consolidated above it for a few weeks before finally going off to set a new all-time high. So from my perspective, this was a very important level to hold. It also co-aligned with the bottom of the channel. And I said in the previous video, this looked like a great spot for a bounce. Well, friends, that is a bounce. See this action? Look how perfectly it kissed this channel that we drew weeks ago. This is the kind of price action I love to see. Now, it's still early. This is a 4-hour chart, and it's only been a few candles, so we can't say with conviction that the bottom is in and the bounce is confirmed. But it's starting to demonstrate that behavior. It is starting to look like that. Now, it could curl here and fall down like this fractal right before it, but I don't expect that. Just because of the strength of this area, because of its significance technically, this feels like a place where price will turn around. But it's more than just technicals. As any of you watching the channel know, we try to merge technical factors and on-chain factors. And this yellow line has a significance with on-chain data that some of you may remember from the previous video. Let's go take a look at that. Here is our short-term holder cost basis. We've talked about this before. The cost basis of short-term holders is a great oscillator for market sentiment and strength in the short to medium term. Short-term holders are newer investors. They have younger coins, and they make up a subset of the cohorts that hold Bitcoin. And their spending profitability matches closely with price action. So we like to watch those trends to get an idea of where we think the market is headed in the near term. In bear markets, short-term holders find themselves underwater, signified by this orange line being underneath the black line. The horizontal black line represents break even. And so when this orange line is below it, it means that short-term holders as a group are underwater. The cost basis of their coins is lower than the spot price. In bull markets, the short-term holder cost basis becomes a pivot point. It becomes an area where support is found. And when the market tests this area, when it tests neutral for short-term holders, buyers step in, perceiving value, and push the price back up. It comes back down, it tests it on a small pullback, and the same thing happens again, and we get repeated bounces. Earlier in this bull market, which was late 2020, we got a bounce on the short-term holder cost basis here in September of 2020, and that helped propel us into the bull run. What we've been looking for here in 2021 is a second bounce of the short-term holder cost basis after digging ourselves out of the mini bear market that we experienced over the summer. Very short bear market. We dug ourselves out, we rallied, short-term holders found themselves back in profit. They tested this value a few times and off we went. We're now coming back down in price weakness, test this value. And what is this number? 53,000. That is this yellow line, 53,000. So here is the confluence between technical and on-chain that we look for. The matching of strong technical levels with proven on-chain oscillator levels. So if we are in a bull market, as we believe that we are, we should expect to get a bounce at this level. We may see this line dip under here briefly, a brief little undercut of profitability. But the point is, we should expect to see a bounce over a period of days to clear out of this this area, not to spend a sustained amount of time with short-term holders in loss like you saw back here. So right now, conviction about a bounce in this area is very high. We'll continue looking at spending with our P&L dashboard. This chart at the top left is the total dollar value of all coins spent on chain each day. So you get a net realized profit and loss. And what we've been looking at the last few days is this loss realization here, these little pegs of red at the bottom of this chart. Just like we got at the end of September when we shook out some of these weak hands who bought the September top before the October rally began. We're seeing a similar little flush out here at the end of November, people getting shook out from buying the double all-time high tops. And something that I've noticed about this profit taking, I saw Checkmate pointed out in the Glassnode Week on Chain video, and it's very astute, and it's something that's relevant to our analysis here. So we saw profit taking rising into the rally. This green line is one half of this net P&L here on the left. Here is the realized profit, and the red chart on the right is realized loss. So these two combine to make this chart on the left. What we saw into the rally from the end of September through October into the new all-time high, the pullback, the second all-time high, we saw increasing profit taking, spiking up into the all-time high, a little pullback, more profit taking, right? But it's been declining since the second all-time high, a reduction each day in the amount of profit taking on chain, while we're seeing increases in realized losses. So at the same time that profit taking is going down, realized losses are going up. Now, why is that important? This provides supporting evidence that the coins moving on chain right now are predominantly short-term holders. They are newer hands. They are not older coins being spent. We have seen a bit of distribution from older hands, and we'll look at a chart in a moment to explain some of that. But by and large, we are not seeing profit taking remain high, remain elevated, despite the fact that price is still in the mid 50Ks. There are a ton of current holders in profit right now who could be taking gains off the table, and they are not. In fact, profit taking is declining, which means that the vast majority of profitable coins are happily sitting on the sidelines and watching. They are not feeling the need, the pressure to realize profits and escape. That's a sign of confidence. This kind of behavior tells a lot about the market. If this was an area of concern, if this pullback looked like a place to the market that Bitcoin was done, that it didn't have any further to go, and that people felt like it was their last opportunity to make some money, we would be seeing sustained profit-taking prints here by everyone who's been in the green throughout this rally, right? All these folks who still have coins and previous holders. If they felt like their last chance at profit for a period of time, for months or years, was approaching, they would be cashing out. And we haven't seen that behavior yet. If we look down here at adjusted SOPR, this is the total network profitability of all spent coins. Now, the adjusted SOPR discards transactions that are from coins less than an hour old, so it tends to ignore things that are part of day trades. But what we've seen here, we caught a bounce right at break even, a nice reset of SOPR, let me zoom in, a nice reset of SOPR here at the end of September, a brief undercut, a few people represented losses, and then we continued on. We're now seeing that bounce play out again here at this level. Now, this view of SOPR, of spent coin profitability, is all coins of all ages. This purple chart in the middle is just the short-term holders. We did a nice deep dive of this chart and the fractals within it in the previous video. I'll leave a link down below. Highly recommend you check that out. The structure we have been watching here on short-term holder spending was this increase in profitability. We've been setting higher lows and higher highs, but the spikes of profit taking are very muted compared to where they were a year ago in the proper raging bull run of early 2021. These big spikes of profit taking are not what we're seeing over here at similar and higher prices. We're seeing a slow, steady grind upward out of loss into profitability by short-term holders. And we have seen a bit of loss realization here in the last few days, a bit of an undercut, but it retains the long-term trend of higher lows of profitability of spending. So it's showing the market digging itself out of a period of loss, of pulling itself out of a bit of a bear period. This did look like a bear market, even though it was only a couple of months long. And so we're seeing short-term holders spending coins in profit, a few of them being spent in loss, which has to be these buyers, because short-term holders only have coins from this period here. I think the oldest short-term holder is from late June. So everyone who is a short-term holder that is a member of this group has a coin from this area right here. And for them to be spending a coin in loss, the only way this line would be underneath break even is if the coins being spent here are from these tops. That's the only way. So these quite literally are the top buyers. They are spending their coins to someone else. And when this behavior completes, the market should be set to continue onward. We don't want to see sustained lower levels of loss from short-term holders that would break the pattern. Now a brief check-in with our long-term holders. So we just spent quite a bit of time looking at short-term holder activity. The other half of the coin are the long-term holders. These are folks who have been holding their Bitcoin for at least 5 months. That's our cutoff date. And they represent one of the strongest handed cohorts of hodlers that we have on chain. Whenever prices make new highs, long-term holders distribute their coins into market strength. This behavior has played out across every market cycle, and I have studied it extensively. There's a link in the description to an article I wrote detailing the behavior of long-term holders with some really cool charts, and I recommend you go check that out. What we had been watching for the last few weeks was some distribution out of this group. We wanted to see if coins were getting spent out of long-term holder supply into short-term holder supply. What we saw in October and November was a quick distribution from this group. If I zoom in, you see this quick flush down of supply. This really started the distribution. And from here on out, it was just spending and spending by long-term holders. This dip represents about 1.1% of long-term holder supply at this point in time. A little over 1% of their supply was spent in a single day. What we've seen over here, we did see a dip down. See this little blip? A few coins got spent into the sell-off, but this only represents about 0.5%. So half of 1% of their supply was spent right here. Less than half of the percentage that was spent over here to begin this distribution event. So what does that mean? That means that long-term holders are not fully distributing yet. What we've seen in past markets is that when a new high is made, long-term holders begin distributing immediately. And it's a pretty steady distribution into short-term hands until the top gets put in. So we've been expecting to see that behavior. I mean, just like we saw here at the end of last year and into the spring. This event is what we expect, and we're not yet seeing it. It hasn't quite started. And I think part of that is because this group is savvy. They're in tune with what's going on with Bitcoin. And I think it's pretty obvious that we're not in a raging bull market. This group is still kind of holding back. It seems like they're waiting to see more market strength to sell into. They need more liquidity. So we're watching long-term holders. We'll probably see some more distribution from this group, but based on what we've been watching the last few weeks, I think that we're in for more patience from this group. Here's a chart I put together just to make a point about the activity on chain. This is showing the spent volume of coins aged 6 months to 5 years. That makes up a window of holders that are frequently active in all bull markets. That group, 6 months to 5 years, make up the majority of older coin spending when we see older coin spending. What this is showing is their daily spent volume as a percentage of their total supply. So it's in relation to their amount of owned Bitcoin. In bull markets, this value is very high. As you can see, it's spiking over the red line I've placed. In accumulation periods, it can be very low. Spending is very low as the majority of activity are inflows and people accumulating coins that are dumped from these market tops. It takes a long time to buy up that supply. And if you look over here where we are right now, I'll zoom in. There was an increase of activity from 6 month to 5 year coins earlier this year as we got to this initial top at 40K. We've spoken about at length. This is where whales sold, long-term holders sold, miners sold. This was the on-chain top. Activity has receded since then, and we're now back up to all-time highs, essentially. I mean, I know that we've pulled back. We're 20% down from it, but we created new highs, and coin spending activity on-chain has barely broken the yellow line. This group of holders, 6 month to 5 year coins, which make up the majority of active, profitable hodlers, they're simply not moving their coins. This value is very low, and in fact, it's even receding in the last few days. So until I start seeing this spiking up, I don't really really think the market is anywhere close to being done, because what puts a top in is a bunch of investors dumping supply onto the market, so much that demand is overpowered and price rolls over, and it takes a long time for the market to absorb all that dumped supply. It's like spilling a huge pitcher of water on the floor and trying to clean it up with cocktail napkins. It takes a long time. We hodlers are the cocktail napkins, and when sellers dump coin onto the market, hodlers will buy them up, but it does take time. But so far, we don't even appear to be approaching any moment where the supply gets dumped. That needs to happen first for the market to give up on itself. If we don't see that behavior, but we do see weakness in price, then my bull thesis is not threatened. We can see price weakness, but if holder classes are not dumping supply onto the market, if they are seeing them as opportunities to buy and continue accumulating, then it's just a matter of waiting the days or weeks for us to absorb that supply and continuing forward. So until we start seeing more coin spending from older hands, it doesn't feel like the market is under threat of being flooded with supply, which would signify the end of a bullish period. I do want to touch on our futures dashboard because it was been playing a role the last couple of days. So open interest, the total value of all open contracts in the futures perpetual market, has been at a high level for the last few days. Over here is our funding rate. This helps to represent the amount of leverage and bias that is in the system. When more and more traders open long positions, the funding rate increases to the positive, charging them a higher premium to have their positions open and encouraging traders to take the other side of the trade. It's a way of governing the system and encouraging balance. Funding was pretty elevated through most of October, as you can see here. The values were a lot higher than what they've been recently. But what's different now is that we have the futures ETF at the Chicago Mercantile Exchange, which helps to drive a lot of the interest in the futures market. It's not in the perpetual market, but it does raise interest. And since then, we've just had sustained high levels of volume across all derivatives for Bitcoin. So we've got open interest of contracts up here, right? We've got the funding rate here, which shows us how much leverage and bias is in the system, and we've got the liquidations. So funding is rising as price is rising. That's great. It's the cost of doing business. Longs are stepping in. Everyone's happy. Funding spikes even more, up to 0.15%. But price isn't ready, and it starts to roll over. And what do? We get some liquidations. Over a period of a few hours, we get about $100 million in long liquidations. The funding rate flushes back down to zero. It gets reset. All this money gets cleared out. And then open interest, if I zoom in over here, I hope you can see this, open interest actually rises in that moment. So these people are getting liquidated. These positions are closed, but rather than open interest going down, it goes up. So to me, this looks like new money leveraged longing the dip, because funding has remained positive. In fact, it's just spiked right back up to the positive while these new contracts have opened. And it's kind of maintained this level for the last day or so. So what I believe happened here, we got a few folks liquidated as price showed some weakness. We flushed them out, and some new traders stepped in immediately to long the dip, which, let's face it, is smarter than longing the top. There's no major activity here to write home about. Open interest remains elevated. Funding is positive. We get a few people getting liquidated, and this is going to need to happen, especially when we have a low demand environment like we have now. If we were not in a low spot demand environment, price would be ripping because there aren't that many sellers. But instead, price is just kind of bumbling along. So while we're in that environment, any kind of wobbliness in futures is going to play a role. What's getting challenging from my perspective is determining what funding rate is high or not. In the spring, we had really high funding rates. We had people paying 100% annualized premiums just to be in futures. But price continued on for months without completely collapsing. But here in the fall and winter of the same year, we have much lower funding rates, and we're seeing a lot more responsiveness from this market. The price is reacting a lot more to what's going on in futures. My conclusion as to why that is the aforementioned low spot demand. The market is quiet. There isn't a lot of activity happening. So any little movement plays an outsized role. So we'll keep watching funding. It does seem like it's remained positive. We haven't fully reset to zero. There are still some longs out there, and maybe they'll get juiced if we see some more downside. We have a question from one of our viewers. Emma asks, I do not really understand the difference between MVRV and SOPR. MVRV is not really at 1, but short-term holders are already realizing losses? If MVRV is their cost basis and we're not at 1, how can they lose as a group even though we didn't reach their cost basis? That is a great question, Emma, and I would be happy to answer it. Here is the MVRV of short-term holders that we looked at the beginning of the video. The MVRV represents all of the coins owned by short-term holders. At any point in time, some of the coins are being spent and a bunch of them are being held. Their combined profit ratio of everything owned by short-term holders is the MVRV. There are a bunch of people sitting in profit as short-term holders who are not doing anything. They represent the profitable side of short-term holders. There are also some of them holding coins in loss because they bought the top. And combined, that entire group represents this orange line here as their standing profit ratio. This value, this pink line, is the spent profit ratio of short-term holders. The only way that a coin shows up on this chart is if it is spent. So short-term holders that are sitting on their coins right now, that aren't spending them at all, they are part of this MVRV line. Their profitability gets counted in here. The only ones that are counted here are the ones that are spent today. When they are spent, they have some profit ratio at that time, and that's what gets printed on this line. But if they don't get spent, they don't show up here. They're only part of this group. So I hope that helps explain the difference between the spent profit ratio, this, the SOPR, and the standing profit ratio of the whole group, which is their MVRV. And just to wrap up on the questions side, many of you asked about this chart that I showed in the previous video, the change in whale supply. I was asked what this software is. What I'm using to build these charts is software called Tableau Desktop. Tableau. Tableau Desktop is enterprise data visualization software, and I've been using it for years in my fiat job. So now as a Bitcoin analyst, I've brought it along with me, and I use it to produce visualizations that I can't create on Glassnode Studio. Anyone could get a copy of Tableau Desktop and start playing around with charts. It's a very powerful tool for visualizing data. And if you have any other questions about this, I'd be happy to answer them. Just leave them in the comments below. So to assess, futures open interest remains high and in fact increased about 6% in the flush yesterday. Funding is on the positive side. It was reset during the sell-off yesterday, but bounced right back up to 0.01%, which is a positive neutral level for funding. We got a few liquidations. We got about 100 million in liquidations yesterday, but it didn't discourage this group. And we know that they are just a factor. They're just a part of reality for Bitcoin. The spending volume of older coins, of 6-month to 5-year coins, is still historically low from where it usually is at this point in a bull market. We retested new high prices, and older coin spending is still very muted, which leads me to believe they remain patient and expect higher prices. We looked at the spending behavior of coins on chain, and we noted that the higher lows and higher highs structure of profit taking for short-term holders remains intact, despite losses being taken yesterday. We saw a little bit of loss realization, and we expect this value to continue creeping its way upwards and to the right. The network as a whole caught a bounce at profitability as short-term holders were realizing a bit of losses. And we know that these short-term holders, to be realizing these losses, are literal top buyers. It's the only way they could be in loss at this point. Once we shake them free, we should be clear to move on. We caught a bounce at the critical short-term holder cost basis that we'd pointed out in previous videos. Our thesis is playing out so far, and it's just a matter of giving the market time for all the pieces to fall in place as we expect. There's still plenty of room for this to go awry and for our beliefs to be tested. If we start seeing data that suggests we're wrong, that Bitcoin's going to do something unexpected, we'll hit the charts and we'll talk about it together. But so far, as we've been watching now for many weeks, Bitcoin is doing what we thought it would do. By having a reasoned, objective approach to the data, we are able to discern patterns based on historical trends and diagnose this market using on-chain data. This approach is bearing fruit for us, and we will continue to work it objectively and scientifically as we go along. Make sure you follow me on Twitter at TXMCTrades. I post a bunch of charts and daily observations that won't always make it into the videos, and it's a great place to interact with me and ask questions. We'll give the market a couple of days to play out before we make another video. So maybe Tuesday or Wednesday, we'll look to do another update and see what we've missed. I hope all of my North American friends had a wonderful Thanksgiving week. I spent a bunch of time with my family, had a bunch of delicious food, and I'm ready for a relaxing weekend. If there's anything you'd like me to cover or any questions you have or topics that I haven't explained fully, feel free to ask me in the comments below. We'll speak again in a few days. I hope you have a great day. Stay healthy, stay happy. We'll chat soon, friends. Take care. Cheers.